Good afternoon, everyone.
Good afternoon.
Good afternoon, everyone.
Good afternoon.
Good. Who's feeling maybe a little bit overwhelmed right now? A little bit, just a little bit, tiny bit. It's okay. You can say it. It's all right. It's no problem. No one. Okay, good. See, normally, when people are overwhelmed, it means that, the presentation wasn't effective. But obviously, no one put their hand up just then to say that the presentation is pucker, right? So, thank you very much. Let's get going. So who are you? Oh, very good. See, that's right. Yeah, it's the trick question. That's it. Good. Where are you?
Here.
What time is it?
Now.
And who are you?
This moment.
Perfect. Good. Let's talk about technicals. So the first module was all about fundamental and what moves the market and what news releases are and how things have different effects. The next module is all about technical aspect behind FX. So you're going to understand how to read the price on charts at the end of this module. So you've already seen some charts already, you've done some calculations, you've done some pips and pricing work and stuff like that. Now you're going to understand actually how to look at those charts and understand what they're telling you. You're going to be able to talk about currency pairs in terms of pip movement. We've already done a little bit of this. You're going to have a stronger understanding. I'm going to show you two types of bars. So first one being candlesticks, the other one being OHLC. I'm going to go into a little bit of detail on that straight away. Then you're going to understand the difference between an up and a downtrend, okay, and how we define them in the market. And then you're going to understand some principles of support and resistance. This is a very big module, right? So we're going to go straight into it. And we'll start by looking at Forex charting. So in Forex charting, there are two different types of bars that we can use. The first one is what we call an OHLC bar. OHLC standing for open, high, low, and close, right? So what does that mean? So let me give you an example. Who here likes sweets? It's just me and Taz and... Okay, Nathan in the back, good. Okay, and Sarah. No one else likes sweets? Well, are you guys okay? Okay, no problem. All right, so we like sweets. Let's say Nathan at the back said he likes sweets. So let's say Nathan goes into a sweet shop, right? And sweet shop has till, right? So let's say shop opens at 9 a.m. What time's shop open?
9 a.m.
Perfect, great. Shop opens at 9 a.m. and it has from last night £200 in the till, right? So we could say that that was the open price of the till. Does that make sense? Let's say that at some point during the day, Sarah, who likes sweets as well, came into the shop and she had bought some sweets from yesterday, but she'd found that they were no good and she didn't enjoy them and she wanted a refund. A really great shopkeeper said that refunds are allowed, so she came back in, she got like £50 worth of refunded sweets. She likes sweets a lot, so she bought £50 worth of sweets. So she got £50 refunded. How much money is left in my till? 150. So let's say that there's £150 in that till at that point. Now, who really likes sweets? Okay, Taz really likes sweets. Oh, you really like sweets? Okay, good. So now you're a cash and carry buyer, right? So you come in and you're buying in bulk, right? So let's say you're buying £400 or £500 worth of sweets. Let's say you buy £500 worth of sweets. How much money is going to be in that till? Anyone else?
You said buy £500
£500 worth, and how much is in the till at the moment?
150.
Yep. 650? Everyone get that? Anyone not following the example? Okay, good. So, let's say now we have £650 in that till. A couple more refunds come in and less money in the till, and let's say we close the day 5 p.m. with, let's say, £600. So what we've done here is we've drawn what we call an OHLC bar of that till in that shop. Does that make sense to everyone? We've just mapped the price. We've just mapped the price over a period of time, over a period of a day in that shop till. The great thing is is that this is exactly what we do with the currencies, right? So you guys were looking at some pips and pricing. So for example, with the euro dollar, if it started at 1.3320, went down to 1.3300, went up to 1.3400, and finished at 1.3360, right? It would be an OHLC bar. Now this bar would be green in color. Why would it be green in color, James? It's going up, and most crucially, where is the close price in relation to the open? It's above the open, right? It's closed above the open, making it a green bar. So then in that case, Nathan, how would you define a seller bar? What would be the difference between that and a red bar? With specific reference to the close price. That's good, you're not meant to know that because I haven't told you yet. Okay, so with a seller bar, you're going to get the close price closing below the open price. That's going to make it a seller bar. Key difference. Do all my beginner traders understand this? Yes? Anyone confused? And I can just go over it again.
Yes, please.
Okay, brilliant. Which part didn't you understand?
About the seller bars.
About the seller bars. Okay, great. So just a little bit of echo. We can correct it. Okay, so a seller bar would be where your close price, so in the shop, in the till that day, let's say you finished with just £300, but you opened with 500. So if the sweet shop's till had less money in it than when it started, it would be a seller bar, because the close is below the open. Does that make sense? Yeah? Does everyone understand OHLC bars, buy bars, and seller bars? Yep. For all of my traders who have done trading in the past and everything like that, was that a good example? Yeah? Very well said. Give the person next to you a high five. Tell him, damn, isn't he good? Okay. All right, okay. All right, so good. That's OHLC bars. So the next type of bar are candlestick bars, okay? So with candlestick bars, it's exactly pretty much the same as an OHLC bar. The only slight difference is we actually color the body. So all we do is color this in, and it will be a solid green color where it's a buyer bar. And the only way you know that it's a buyer bar is by the color of the actual candlestick, right? Because now there are no flags sticking out telling you where the open, high, low, close is. Does that make sense? Yeah, so the open would still be here, the close would still be here, this would be the high, and this would be the low. That's the only real difference between an OHLC bar and a candlestick bar. Make sense? Okay, good. So, two types of bars. Now, you don't use both at the same time, you just pick which one you want to choose. Some people have a preference to looking at candlesticks, and some people have a preference to looking at OHLC bars. When I was trained, I looked at OHLC bars, and so I've always used those, and so my bias is naturally towards them, right? Completely interchangeable, and you should experiment with both and see which one you can read the easiest and roll with that. Yeah? So that's the only key difference. So candlestick bars look a little bit like this, and I understand why you look at candlestick bars, they are easier to see patterns inside. For example, this bar here. Most bars tell a story, by the way. Most bars will tell you a story. Every bar will tell you a story. It's just about knowing how to read it. Yeah? So sometimes those stories are easier to spot on candlesticks than they are on OHLC bars. You've just got to find out which one you can read the easiest. Most of the examples in the manual are OHLC bars. Why? Because primarily that's what we trade with.